Hi there. I'm verified Algo trading champion Kevin Davey, and today I'm going to talk to you about a good performance metric that you don't always see. What is it? Well, let's get started. Today's metric, and the one I want to talk about, is one you don't normally see in performance reports on most major trading platforms. And it's net profit divided by your average drawdown. And you might say, well, wait a minute. I see net profit in my report. I see max drawdown in my report. So isn't that the same thing? No. Max drawdown is something completely different than the average drawdown. And so I'll show you that with this equity curve, these two equity curves. You can see both end up, it's kind of hard to see here, but both end up at the same point, the same final equity, but they have different drawdowns along the way. So you can say, which one would you pick if you had your choice between them? So I'll give you a second. So take a look at these two equity curves, and if you had to trade one, which would it be? Tick, 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 tick. Most people would pick A, right? The top one, because it has a nicer looking equity curve, not as many drawdowns, or actually only one drawdown, really. B has more drawdowns, but you end up at the same point. The net profit is the same. And actually, if you did the calculation, the max drawdown's the same. So that might be why it's hard to pick for some people. If they only looked at net profit and max drawdown, these two strategies would be identical. That's why we need something like average drawdown. So what the average drawdown does is after every trade or every day, however you calculate it, it will calculate the drawdown, the current drawdown. And you can see in the top chart, there's basically one trade after one trade or one day where it hit its max drawdown. All the other days it was either flat or going up. So the average drawdown here would be this point plus this point plus this one plus that plus all these other ones averaged out, right? That would be your average drawdown. Most of the time it's zero. That's pretty nice. Where the bottom curve, you can see there's a drawdown here, which corresponds to this point. Then it goes flat. Then there's your max drawdown over here, and then it goes up a little bit, and then it hits a new high. Then it hits the third drawdown right here, which is represented right here, which isn't as much as this drawdown, but it's pretty significant. So you can add up all these drawdowns for every day, and you can figure out that the average drawdown for number 2, the bottom one, is a lot more than the average drawdown for number 1. So number 1, the top one, is clearly the better equity curve. And in fact, in this particular example, it's only 16% of the second curve. So hopefully you can see how this metric, just the average drawdown by itself, how it could be a really important and useful metric. Because it tells you a lot more than the just the net profit, which we said was the same, and it certainly tells you more than the max drawdown. Remember, the max drawdown is 1 point in time. So if you have a 10, 20-year back test, that max drawdown is 1 point out of that 20-year curve. I mean, it's good to know. Worst case, that was your max drawdown, but the average would be over all 20 years or all 10 years, whatever your back test is, and that makes that one a lot more valuable. So the big problem when you start to look at these performance metrics is you can just cherry pick the ones you want and get great performance. So somebody might say, hey, those two equity curves are the same because I'm only looking at net profit and max drawdown, right? And you might say, oh, yeah. And if you don't think people do that who are out there selling, trading strategies, trading rooms, that kind of stuff, then you've got to open your eyes a little bit, because people cherry pick stuff all the time. So what I'm saying is dig a little deeper, look at some other metrics that maybe you hadn't thought of before, and average drawdown is one of them. Because when you start applying some of these other metrics, what you think is amazing might just be, so-so. And that's what we saw in the case here. So hopefully this helps you out, gives you another metric to think about. If your trading software does not automatically calculate it, the way to do it would either be export all your trade data or export your daily equity, marked to market equity. That's important. And you could calculate the drawdown from that. And then you could calculate your average over those many days or those many trades, however you do it. The point is, it is a good metric. And when you're looking, so that's just the risk side. When you're looking at net profit divided by average drawdown, that becomes a really good risk-adjusted metric, where it's performance, which is your net profit, and risk, which is your average drawdown. So hopefully this helps you out, gives you something to think about with your own algo trading. If you like this video, give it a thumbs up, hit subscribe, leave a comment. Let me know what your favorite performance metric is. What is it? Maybe it's consecutive losing trades, or the covariance of something. Let me know. I'm curious. I'm curious what other people think. All right. Thanks for watching. I'm Champion Trader Kevin Davey. Have a great day.